Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 20th, 2025, and we're diving into the latest earnings report from ProPhase Labs, a next-generation biotech, genomics, and consumer products company. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ProPhase Labs has released their Q1 2025 financial results, and there's a lot to unpack, from strategic divestitures to potential liquidity events. Let's get started.
Revenue and profitability overview. Let's start with the top line. ProPhase Labs reported a net revenue of $1.4 million for Q1 2025, a decrease from $2.4 million in the same quarter last year. However, they managed to turn a net income of $3.966 million. John, can you explain how they achieved this?
Absolutely. Despite the drop in revenue, ProPhase Labs improved their gross margin significantly to 36.8%, up from a negative margin last year. This was achieved through cost-cutting measures, including the divestiture of their Pharmaloz manufacturing operations and shutting down their genomics lab, which reduced overhead expenses.
And their earnings per share came in at 11 cents, which is quite a turnaround from the loss per share last year. What does this indicate?
This indicates a strong improvement in operational efficiency and cost management. The company has focused on becoming a leaner operation, which is reflected in their positive EPS this quarter.
Strategic initiatives and cost reductions. ProPhase Labs has undertaken several strategic initiatives recently. Can you tell us more about these, John?
Sure. The company completed the divestiture of its Pharmaloz manufacturing operations for approximately $23 million, which saves them over $2 million annually. Additionally, they shut down their genomics lab, saving another $6 million per year. These moves, along with a significant reduction in headcount from 96 to 25 employees, have drastically cut costs.
And I understand the CEO has also taken a pay cut?
Yes, Ted Karkus, the CEO, voluntarily deferred his salary by more than 2/3, and other senior management and directors have deferred their salaries by 50%. This aligns their interests with shareholders and reduces the need for dilutive financing.
Future outlook and liquidity events. Looking ahead, what are the key future prospects for ProPhase Labs?
The company is anticipating multiple significant liquidity events in the coming months. They are pursuing strategic alternatives for Nebula Genomics, which could lead to a sale. Additionally, Crown Medical Collections is working on recovering approximately $50 million in insurance payments, which could provide a substantial cash influx.
And what about their BE Smart test?
The BE Smart esophageal cancer test is nearing commercialization. It's a promising diagnostic tool that could significantly impact their revenue streams once it hits the market.
Key takeaways. In summary, ProPhase Labs has made significant strides in transforming its operations and financial health. With a net revenue of $1.4 million and an adjusted EPS of 11 cents, they have exceeded expectations. The strategic cost reductions and anticipated liquidity events position them well for future growth. John, any final thoughts?
ProPhase Labs is on a promising path with their strategic initiatives and focus on high-value assets. Investors should keep an eye on their upcoming liquidity events and the commercialization of the BE Smart test.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ProPhase Labs' performance in the comments below.